Welcome, everyone. And I'm sure people are dialing in from all over the world in terms of different time zones. So thank you so much to everyone for making the time to call in today. My name is Bronwyn Sanders. I am a director of admissions at NYU Stern. And again, thank you for joining us today. We are especially excited to have Professor Rob Seamans from NYU Stern with us today. In just a few moments, he is going to be leading a session on AI for risk management, a topic that is top of mind for finance professionals in this fast-changing global landscape. But before we do turn things over to Professor Seamans, I would like to take just a few minutes to share an overview of the HKUST-NYU Stern MS in Global Finance program. So without further ado, the MSGF program is a partnership jointly organized by the Hong Kong University of Science and Technology and NYU Stern School of Business. The partnership brings together the strengths of two top world-class business schools to deliver a truly global finance education. The program is designed specifically for experienced professionals who are passionate about mastering the complexities of today's interconnected financial landscape. Courses are taught by faculty members from both HKUST and NYU Stern, combining academic research and real-world insight from both institutions. What you learn in the classroom on a Friday can be applied directly to your position on a Monday. Graduates are awarded a joint Master of Science in Global Finance degree and are becoming a part of a global network of both schools upon graduation. Now I would like to walk through the module schedule and the curriculum in more detail. The MSGF program is a one-year part-time program, and we've designed it for professionals who are looking to deepen their financial expertise while continuing to work full-time. Given how interconnected the financial markets are today, having a global perspective is critical. The program gives you that perspective by offering 6 in-person modules that are held across New York, Hong Kong, and Abu Dhabi. We have one intake per year, and our next cohort is starting this November. Each module is held in person, allowing for deep engagement with both your peers in the cohort and faculty members. In between sessions, you're still very much engaged with the program, and you're completing both pre-module and post-module assignments. And we estimate this work to be about 20 to 25 hours per week, and you're doing this part remotely. The program includes 12 specialized courses that begin with foundational knowledge and build more towards advanced practical applications. So you'll start with a broad overview of global finance, including courses such as Foundations of Corporate Finance, Foundations of Investments, Global Macro and Asian Markets. And then as you further progress, you'll explore areas such as fixed income markets and risk management and financial institutions. Also, you can see the module schedule in front of you here. Each session every day runs from about 8:30 to 5:30 each day, with some evening social engagements. And a key highlight of the program is our integrated project, where you'll work in teams to tackle a real-world finance issue. Upon completion of all coursework and successful presentation of your integrated project, students are earning a Master of Science in Global Finance. So I'm going to write to everyone following this session, but we really do encourage you to reach out to us if you're interested in our program. It takes 2 minutes to submit a preliminary information form, just with some basic information of your background. And we have an upcoming application deadline coming up on June 30th. And for now, without further ado, I am pleased to introduce Professor Rob Seamans of NYU Stern. Professor Seamans teaches AI and machine learning actually in the MSGF program, and His research focuses on how firms are using emerging technologies, especially AI and robotics, in strategic decision making. And he also directs the Center for the Future of Management at Stern. Professor, I'm going to stop sharing my slides and you can I'll leave it to you to start.
Bronwyn, thank you. Thanks for the introduction. And let me just pull up my slides. And Bronwyn, does this look okay to you? Is it
Looks
coming?
great.
Okay,
Looks
great.
great. Thank you.
Thank you, Bronwyn. Thanks for the introduction. Thanks for inviting me to come and speak, and thank all of you who are joining in this webinar. So my name is Rob Seamans. I'm a professor at New York University's Stern School of Business. I've been here for 17 years. I'm an economist by training, and a lot of what I look at are impacts of technologies like AI and robots, as Bronwyn mentioned. So what we're going to talk about today is the impact of AI on the economy and the importance of mitigating risk from AI. Okay. Okay, so here's the overview. So just to give you a sense of where we're going over the next 30 minutes or so. So there are a lot of exciting applications of AI. Some are sort of, we are experiencing right now. Others are applications that are sort of just around the corner. These applications will likely lead to economic growth. We don't yet see that in the official statistics, but as an economist, one of the things that I'm very excited about are the sort of potential for economic growth from AI. Recent advances in AI highlight the potential for growth, and here we're thinking in particular about LLMs, and I'll talk more about that in a moment. So the potential for growth, but also they also highlight sort of potential risks. And so one of the things that's going to be important is coming up with ways to mitigate the risks arising or potentially arising from AI. This will ensure that customers benefit from AI. And then when that happens, firms will benefit and the economy will grow. Okay, so again, at the outset, I said I'm very excited by the potential for economic growth, but an important ingredient here is that we need to be able to mitigate the risks to consumers, right? So potential harms to consumers and society in order to really take advantage of and sort of experience this economic growth. Okay, so that's an overview of where we're going. I've already mentioned the term AI without defining it. Now, as a professor, this is sort of a cardinal sin of sorts. So let's get some definitions out there. Here's a definition that I like. AI is computer software that relies on highly sophisticated algorithmic techniques to find patterns in data and make predictions about the future. Just as a quick sidebar, you ask 10 different people for their definition of AI, and you'll get 10 different definitions. I'll be honest, it doesn't really matter. This definition is, I think it's a pretty good definition. It's a good workable definition. There's some people that might agree. There are others that might feel strongly that this is not a great definition. For what we're going to talk about, it doesn't really matter. This is a fine definition. Generative AI, sometimes called Gen AI, it's AI that generates content, so text, pictures, and sound, rather than categorizing data. LLMs, large language models, generate text, and so it's a type of generative AI. So it generates text in response to a user-provided prompt. LLMs have been trained on large corpuses of text. So for example, Grok, this is the AI that's put out by Elon Musk's X.AI, who was trained on X, / Twitter posts, publicly available court documents, web pages, and things like that. And as we'll talk about, there have been some dramatic advances in terms of what LLMs can do. Okay, so AI and economic growth. So there are a bunch of exciting applications for AI, and I've got a few listed here. This is just to give you a sense of some of the categories I like to think about. So some of the applications are very mundane, right? I mean, things like predicting songs that you like. So Spotify or Pandora, and there are other ones out there, they do a great job of this, right? They see the prior songs that you've liked in the past. They make some prediction about what you might, what songs you might like, and they sort of introduce those to you. This is not going to change the world. It's not going to lead to a ton of economic growth, but at least in some small way, it makes many of our lives a little bit better, right? So I categorize this as an exciting application for AI, but relatively mundane. And again, that's just one example of these sort of relatively mundane applications. So everything from mundane to truly groundbreaking. And I think autonomous vehicles, which we'll talk a little bit more about later, truly are sort of groundbreaking applications for AI that'll potentially change the way we interact, we as humans interact with the world, the way that we travel, potentially the way that we live, the way that we meet. I mean, I think that this is a technology that and this is one that's sort of just around the corner. I mean, I get, and I know obviously that there are autonomous vehicles, but really not at scale. So this is something that's sort of just around the corner. We know it's coming, but I think will be sort of a groundbreaking technology. Useful. So Google Maps, I use Google Maps all the time. So I'm based here in New York City. Sometimes when I'm trying to get from point A to point B, I, check different walking routes, or I check and see which subway might get me there faster. And by the way, that subway is often faster than a car in New York City or a taxi. But again, Google Maps sort of provides all that for me, so I don't have to guess, right? So very, very useful technology. Amazon Alexa would be another one. We'll talk about Amazon Alexa later. Predictive typing, I love predictive typing. So we've got mundane, groundbreaking, useful, life-saving. So radiology and the use of AI in radiology. Maybe it will replace a radiologist. Maybe it'll be used together with radiologists, sort of a human plus AI type thing. We don't know, what the future holds, but in any case, to the extent that we can actually identify cancer earlier and treat it earlier, that's potentially life-saving. Financial inclusion. So lots of fintech apps use non-traditional metrics to try to figure out customers' creditworthiness, and this potentially benefits large segments of the population that maybe traditionally have been underserved by traditional sources of finance, like banks and things like that. Workforce development. So here the idea is that we could maybe using AI, we could do a better job of pairing workers with a certain set of skills with potential jobs. So again, many, many different categories of and exciting applications for AI. I believe that these will ultimately lead to economic growth, but no one knows that for certain. If you look at the past, if you look at all prior examples of technologies, all of them have led to economic growth. I think we should expect the same from AI. So Paul Romer is an economist who won a Nobel Prize for some of his work in this area. And his sort of the big argument that Paul Romer makes, and sort of the paper that led to his arguably led to his Nobel Prize, is that technologies are really the things that drive economic growth. And so, if you look at the past, prior examples of technologies would be things like steam engines or electrification, early IT. All of those have led to productivity growth. Okay. By the way, I'm seeing a few questions come in, and we'll definitely have time for questions at the end. But what I plan to do is sort of get through at least most of my slides before we turn to questions. If you all have questions, please use the Q&A feature to enter your questions there, and we'll come to those. So I believe that we can look to prior technologies to get a sense of what we might expect from AI. Now, I think a great example of somebody doing this is Fidelity Investments. So they have this report. It's titled "Artificial Intelligence and X Factor in a New Investment Regime." It came out in, I believe it was July of 2024. Irina Teitel, who's an economist at Fidelity, was the author on that. And here's what they say. Studying the adoption rates and the productivity impact of past technologies can help set baseline expectations for AI-driven productivity growth. Focusing on the technologies we believe are more akin to AI in terms of the likely economic impact can provide more targeted baseline cues. Okay, so let's just take a look at some of what they did in this report. So so this is one of the approaches that Fidelity in this case, are going to use to try to estimate the impact, the economic impact of AI. And so what they do, the sort of first point that they make is, in order to understand the economic impact of AI or any other technology, we have to have a sense of how rapidly it's going to be adopted, right? Because if the technology can do great things but isn't adopted, then it's not going to have much of an effect on the economy. really we're only going to see the effect once we've seen a whole lot of adoption. And some of these technologies, might not look very similar, right, railway, to AI. Others might look more similar. So things like, internet, robots, personal computers, and cell phones, more contemporaneous technologies. Perhaps we think that they might be more akin to what's happening with AI. And again, you see different diffusion rates for these. Internet and cell phone, perhaps look a little bit more similar relative to personal computers and industrial robots. Again, this is not my research. This is from Fidelity Investments. Okay, so here we're looking sort of in chronological order at the different technologies, and they come up with sort of a subjective way to say, and you'd have to read the report if you want more details on this, to say how similar these technologies are to AI. And ranging from 5%, right, not very similar, railways, to robots and computers, 25, 30%. So much more similar to what it is that AI can do. The next thing they do is they look to see how long it takes to go from a 5% to 50% adoption, okay? And again, you see a range here, and they use that to come up with an estimate for AI, 15 years. And then they estimate the additional productivity boost that you get from these technologies. And some of them lead to negative productivity growth. Others lead to positive. When you look, and that's sort of in the early years, so 10 years after reaching 5% adoption, whereas when you look in the later years of these technologies, right, so 50% adoption, there you tend to see sort of much larger effects. So sort of taking all of this data together, what Fidelity estimates is that, within 15 years, it should take 15 years to get somewhere between 0.3 to 0.9% of a boost to economic growth. Now, that might not seem like a large number, but if the economy is growing at 3% every year, that's anywhere from a 10% boost to a third of a boost to economic growth. What we were just talking about is in gray, in green, and in blue. These are other methodologies that Fidelity uses, and you see they sort of come up with sort of similar estimates, somewhere around 0.3% to 0.5 to 1%. Okay, so that's Fidelity Investments. By the way, one thing that I like about what they've done is they provide a range of estimates. Goldman Sachs is another company that has done something similar. This is a slightly different take on growth that they're doing here. Here they're looking at labor productivity growth instead of GDP growth. So it's a little bit different, but again, you see some similar numbers here relative to what Fidelity did. Again, one thing I like about this is they're providing a range of outcomes as opposed to saying this is how much growth we're going to get and by this time period, right? These economists are being very, very careful in taking a variety of approaches to try to understand the effects of this technology on our economy. Okay, so that's a very macro view in terms of the likely growth that we'll get. Now, if we sort of dig down a little bit, the question might be, well, how is it that AI will actually boost growth? And so I like to think of the following three categories, and these are not meant to be mutually exclusive, and they probably don't capture everything, but these are sort of three categories I think a lot about. One is that AI might help us make existing products and services more efficiently. So we're not changing anything that we do. We're just able to do it a little bit more efficiently than we did before. Okay, and there's some examples there in italics. Another category would be taking the existing products and services and sort of the inputs that we have into making those products and services, but just lowering the cost of them. And here, mostly what we have in mind is substituting human workers for AI, okay? Now, I'm not saying, and I don't think that that's going to happen in the vast majority of cases, but it will happen in some cases. A likely place where it will happen, but the timeline for this is very uncertain, would be autonomous long-haul truck drivers versus human truck drivers. Once we're in that state, then the cost of long-haul truck driving will be lower than it is right now. I think it'll take a long time before that happens, but that would be one example. So that's sort of two buckets so far. And then the third bucket would be, and this is really what I get most excited about, is creating something sort of new to the world, right? So it's something that consumers and businesses value that didn't exist before, that now exists thanks to AI. So this is sort of true innovation. And these are the types of things that really boost economic growth. Now, I just have some small examples here, like predictive typing, Spotify, and Alexa. But as we talked about earlier, some bigger, possibly groundbreaking ones like autonomous vehicles might be another. Right? Okay, so that's just a little bit of background in terms of where I'm coming from. So in terms of the past 24 months, we've seen a lot of dramatic adoption and advancement in terms of LLMs and what they can do. Development of AI agents, we'll talk about that in a moment. But in particular with these AI agents, I mean with AI in general, but in particular with the AI agents, we've seen a lot of discussion and worry about risks coming from AI. And then that brings in to the fold this whole discussion around AI safety. And that's sort of where we're going. So if you remember those adoption charts, looking at prior technologies, like cell phone and internet use and robots, I don't have those on here. This is a chart by someone different, not Fidelity. But one of the things that's really interesting is just how dramatic the adoption of LLMs has been, right? So ChatGPT in particular, just really, really fast adoption. ChatGPT is not the only one. So that's ChatGPT is a large language model that's put out by OpenAI. There are a number of other ones. Anthropic is another one. This was a company that was created by folks that left OpenAI. DeepSeek, you'll see in the news sometimes. This is an LLM coming out of China. Meta has one. Google has one. I already mentioned about Grok from XAI. Alibaba has one. Tencent has one. All of the large tech companies have their own version of a large language model. There's a whole variety of these models. I find that the naming convention across them is incredibly confusing, right? So OpenAI's ChatGPT models is 4.0, 4.0 mini, 0.1, 0.1 mini, et cetera. Anthropic's, their model is Claude. There's 3.5 Sonnet, 3.5 Haiku, 3 Opus, et cetera. DeepSeek, there's V3R1. I mean, there's an incredible array now and versions of these models. And the naming convention, I think, leaves something to be desired. So in any case, huge, dramatic, boom in these models. How are they doing? Each new model that comes out tends to break some sort of new ground in terms of some sort of performance metric that they're able to do. And so there are a whole bunch of these metrics out there, these performance metrics. Here's one. This is the length of task that the AI model in question can do, okay, at a 50% success rate. So this is sort of, here we've got sort of examples of the tasks, of how long these sort of tasks might take. So answer a question, that takes sort of 15 seconds. Count words in a passage, that's about 2 or 3 minutes. Find a fact on a web, that's about 10 minutes or so. And these, by the way, this is sort of like for a human to do. Okay, so these models are able to sort of handle ever more complex tasks, and that's what this chart is showing us, right? So not only is there a boom in the number of models out there, but their abilities, if you will, are dramatically increasing. This, by the way, for those, some of you probably noticed this is a log scale. So as time is increasing, these are becoming just rapidly more improved. Okay. Now, so I mentioned AI agents before. I want to spend a little bit of time on this. One of the topics that has come up a lot over the past 2 to 3 months are AI agents. Some folks have referred to 2025 as the year of the AI agent. So let's start with the definition. What's an AI agent? It's an artificial intelligence agent refers to a system or a program that's capable of autonomously performing tasks on behalf of a user or another system by designing its workflow and utilizing available tools. Okay, so what it like in if I could use different words, what is an AI agent? It's an AI, right? An artificially intelligent thing that is given some direction, but then sort of goes out and executes on that on its own. Okay, so here'd be an example of this: customer service. So an AI agent in this case, so a virtual agent on a website that responds to a customer query, relying on its training and data at hand to respond to a customer as effectively as possible, and potentially handing off to a human. Now, if you didn't read that carefully or you weren't listening carefully, you might think, well, we already have that. They're called chatbots. The answer is no. This is something different from a chatbot. A chatbot is something that's basically been pre-programmed. So you ask a question like, actually, the chatbot often prompts you, are you having a problem with your iPhone? Yes or no? No. Then it'll ask, right? So it sort of has these existing answers to whatever your query might be. That's a chatbot. That's not what a virtual agent is. A virtual agent has a large language model that's sort of running in the background, if you will, just like as if you were going to be working with ChatGPT or something like that. You ask the question, and the system sort of feeds that into the large language model to generate an answer. Okay. Now, these are tricky to put in place because you as the firm, you don't necessarily know what that answer is going to be. I mean, you'll spend a lot of time sort of testing and retesting, et cetera, perhaps putting certain guardrails in place around the system to make sure that the answers that this agent gives aren't too off the rails. But again, now we're coming to the topic of risk. There's some risk here because you don't, unlike a chatbot with this virtual agent, you don't know ahead of time what answer the agent is going to give to the customer who comes and is making these queries. Okay, so that's the risk. Okay. The potential benefit, though, is quite large. The potential benefit is that whatever it is that that customer is looking for, they're getting an answer that's specifically tailored to their questions, as opposed to some sort of very bland, sort of vanilla, if you will, response that you'd be getting from a chatbot. Okay. Now, there are a whole bunch of, we talked about like a potential risk here. There are a whole bunch of other issues here. Computing power, it takes a lot of computing power to set up and run these AI agents. There's a big issue around data privacy. So what if the agent sort of asks you, well, can you provide more information? Like, when did you buy it and how much did you spend? And you start entering in some of this information. Well, then what happens to it, right? What happens to this data, private data of your own that you sort of entered in? How is it stored? Is it deleted after a certain amount of time? Does the agent remember this stuff? Maybe if you come back a week later, right? So there are a whole bunch of these sort of tricky issues that come up. Other types of issues that often come up are sort of bias and ethics and things like that. And we'll talk a little bit more about those topics in a moment. Capgemini, which is a large consulting firm like IBM or Accenture, they had a recent report where they estimate that 82% of organizations plan to adopt AI agents in 1 to 3 years. So again, as I said at the outset, a lot of people have referred to 2025 as the year of the AI agent. So another consulting firm, Boston Consulting Group, one of the interesting things that they've been doing is they capture all of the information, all of the words that come out of company earning calls. And one of the things that you can see is, starting in late 2024, you see this dramatic increase in the amount of times that on these earnings calls, companies are talking about AI agents, right? It's of all of the sort of AI topics, it's the one that just has become the most popular one to talk about. I'm highlighting AI agents because just for a moment, I want to zoom back out and talk about sort of bigger picture things. I think AI agents, the topic of AI agents highlights to people some of the not sort of company specific risks from AI, but sort of more, sort of larger societal wide or sort of existential type risks that might come about from AI, right? When you're starting to give so much agency to AI, right? An AI agent, giving agency to it, you start to wonder about what other types of agency you could give to AI, and then you sort of rapidly go down the rabbit hole, if you will, of thinking about the risks to society from relying too much on AI to do things for us. Now, I think this is sort of, I'm touching on this because this type of stuff comes up a lot. In the course that I teach for this MS in Global Finance class, as well as any other course I teach on AI, I basically have like one slide like this, and that's it, right? This is sort of interesting stuff to talk about, but as a manager, right, and you all are managers or potential managers, this is fun stuff to talk about at a cocktail party, but it's not really the type of thing, I believe, it's not really the type of thing that as managers that we need to worry too much about, okay? Nevertheless, there is a robust conversation around this, around sort of risks from what some people call artificial general intelligence, right? This would be when AI is, smarter than humans. There's a lot of questions about what that definition is, and will we know it when it happens? And then there are lots of questions about how long it will take. And you get everything from next year to it'll never happen. And then there's also a whole conversation around fixes to this. Like, is there some sort of off switch that we can just flick and turn off AI everywhere so that we don't have to worry about these types of things? Again, we don't, in the class, I don't dwell much on this, but I think it's just useful to touch on it briefly. Okay, so we've already started to talk about risks. And so this will be just for the next 10 minutes or so. I'm going to talk a little bit more specifically about risk and AI safety. And it's these types of topics that we spend a lot of time on in the course that I teach. As a reminder, we have a Q&A feature that hopefully you all can access. And so if you have questions, please go ahead and put them into that Q&A feature. And then once I'm done with this presentation, I'll come to those questions. Okay, so AI safety, it's a booming field that highlights the various risks that potentially arise from AI and then outlines solutions and trade-offs associated with addressing the risks. And so what, these risks can be categorized in a variety of different ways. So they include things like bias and discrimination in AI models. We spend a bit of time on this in the class. For the examples I'm going to walk us through in a moment, we won't talk too much about this. But this is one of the big worries that folks have, is that the AI models might discriminate against some categories of consumers relative to others. Transparency and accountability, right? This is another topic that AI safety covers. So the idea here in the case of transparency is, do we know why the AI model is making suggestions or predictions in a certain way or not? Like, can we actually look into the quote unquote, black box to understand why the AI model is operating the way that it is? Accountability. So like, why is it that the model is doing this? Who set it up this way? If we think it needs to be fixed, who should we go to get it fixed or to get it changed? Privacy of user data. So we talked briefly about that a moment ago. Many of us use AI models, be it ChatGPT or Claude or some of the other ones that I talked about. As you're using it, you're putting in some data, right? It depends what you're asking the model to do. Some people just, for example, they talk about vacation plans and they want that they use something like ChatGPT to help them create a vacation plan. So guess what? Like, now the AI model, if you will, has information about when you're going to be away from your home. Might you want to keep that private? Might you, just jumping to the fourth one here, security risks and hacking, might you be worried about somebody sort of hacking into something like ChatGPT and grabbing data about everybody in a certain zip code in New York and who will be there, the first week of June and who won't be, right? So these are the types of things that come up with AI safety. Job displacement. So will the AI system or sort of advances in AI lead to some jobs being substituted away or not? How long might that take? So job displacement is another category. Environmental impact. So these large language models use lots and lots of energy. And so environmental impact is another large area of concern that people have been looking at. And then we talked briefly a moment ago about existential threats and things like that. Now, one of the things I want to highlight, I'm just going back to this first bullet point, okay? So various risks, and we talked about some categories of risks a moment ago, and outlines solutions and trade-offs associated with addressing the risks. So I think it's important to point out trade-offs, and this is going to come up again as we go through a few examples in a moment. The big issue here is that for any risk, there's rarely like what people would call a silver bullet to address that risk, okay? There might be some things you could put in place, but these things that you put in place come with trade-offs, right? You might have to give something up in order to sort of handle privacy of user data, right? So in order to handle privacy of user data, maybe you restrict the AI, what it is that the AI system can collect. So that helps us safeguard privacy for the user. But on the other hand, maybe then the recommendations are going to be worse than they otherwise would, right? So there really are lots and lots of trade-offs here. And we spent a lot of time in class talking through some of these different types of trade-offs, okay? Now, the trade-offs in question are often very use specific. In any case, let's jump to a couple of examples here. I've got two examples. Here's the first one, the AI safety use case when it comes to autonomous vehicles. And here, I'm just talking very briefly about this example. The next one we're going to do is Amazon's Alexa. We'll talk about it at a very high level, but then I'll try to describe to you about how some of this unfolds in the class that I run. Okay, so imagine that a politician uses an autonomous vehicle. What are the potential issues, right? Well, one of them is privacy of user data, right? So maybe the politician doesn't want people to know some of the places that they traveled in this autonomous vehicle. But who knows that? Well, whoever operates the vehicle, right? So if it's an autonomous vehicle that's maybe operated by Waymo or Tesla, or maybe Ford will have one at some point, who collects that data? Well, those companies will collect it and hold on to it. Presumably, they might be using it to improve the models in the future. But the politician might not want there to be some record of certain places that the politician visited. And I'll let your imagination run away with you, sort of run wild as you might think of examples. Security risks and hacking, right? It might be really useful to know where a politician is traveling. You could imagine that a bad actor might want to take advantage of that and then might want to try to hack into the system or something to affect what it is that the vehicle does. And this is a terrible example that I have here, right? But terrible as in, dark. But maybe the software could be altered to direct the vehicle into a wall or into oncoming traffic or something like that, right? I mean, that is terrible stuff. But again, these are potential risks that arise with autonomous vehicles. Job displacement. This, I think, is maybe less of an issue here, but just to bring this up as well, maybe the politician used to rely on a human driver, and now they don't. So that's one job there that's lost. Right. So again, these are very at a high level, I said potential issues. I should have been much more explicit. What are potential risks? So these are some potential risks. Some might be more likely, some might be less likely, but potential risks. Now, on the other hand, there are all sorts of benefits to a politician using an autonomous vehicle. They are known to be safer. So the politician will be less likely to be in a vehicle accident and so won't be injured. That's a benefit. There'll be reduced pollution from all the traveling that this politician does, right? Because autonomous vehicles are known to be more efficient. Transit itself is more efficient. Maybe it's faster to get from point A to point B in this autonomous vehicle. That's perhaps a better use of the politician's time so that they are able to spend more time with their constituents and sort of addressing issues that come up. Okay, so here, all we did with this example was talk about some of the risks, but also some of the benefits. Okay. If we thought that there were no benefits, then the risks would clearly outweigh the benefits, if benefits are zero. And so maybe we wouldn't want autonomous vehicles, and maybe we would want to put some regulation in place that prohibited them. On the other hand, if we thought that these benefits outweighed the risks or potentially outweigh the risks, maybe we would want to have some policies in place to try to mitigate the risks as much as possible so that we could take advantage of the benefits. And just as like a slight plug, so I am an NYU Stern professor, but I have an appointment with a think tank called Brookings, the Brookings Institution in Washington. And from time to time, I write policy pieces for them. And I wrote one on autonomous vehicles. And so I try to bring some of this, this type of work that I've done into the classes that I teach, where I'm trying to connect some of the sort of business world, practical world conversation to a very robust conversation that's happening in places like Washington, D.C. and elsewhere around the world around policies that are affecting this technology, AI in particular. Okay, so here's another use case. This is Amazon Alexa. Some potential benefits, right? A convenient information access, smart home hub, entertainment, et cetera. We could think of some other benefits that we get from Amazon Alexa. I have one at home. I don't actually use it, but both of my kids use it. on a regular basis, and they appear to get benefits from it. So in the class I teach, there's this great case that comes not from NYU Stern, but from the Northwestern Kellogg School of Management, called Alexa, a Pandora's Box of Risks. And so this is one of the cases that we use to talk through some of the risks arising from the use of AI. Okay, and so this will give you a sense of how we do this in class. You know, part of what we're trying to understand is how the company in question can mitigate the risks that arise. Okay, so we spend some time, so students read the case, and then we spend some time trying to understand the risks. And here's just a small sampling of some of the risks. There's reputational risk. So if it turns out that technicians at Amazon are sort of listening in on conversations that are happening in the privacy of people's homes, there's some real reputational risk that Amazon faces, right? They don't want to be known as the company that's spying on people, right? That could damage not just the Alexa brand, but perhaps like across other business lines that Amazon has. It could lead to loss of trust with customers. That could lead to reduced sales, again, not just of Alexa, but of other business lines that Amazon might have. There's some regulatory risk, right? So imagine that there's a data breach and somebody hacks into some database of user data that Amazon has been collecting via Alexa. You can imagine there being an uproar, and that could lead to politicians calling for regulation of all speech recognition technology or something like that, right? So there's some real regulatory risk here. Could be, this may relate to the prior bullet point, but Alexa could be a target for cyber attacks. That, by the way, doesn't just affect Amazon. So it turns out that a lot of the tools that are available on Amazon's Alexa are produced by private third-party firms that produce these, the equivalent of like apps for Amazon Alexa. And so it's not just Alexa or Amazon that could be affected. It's all these other third-party firms that could be affected as well. You can imagine maybe legal liabilities arising as a result of that. Maybe some of these third-party firms, maybe they sue Amazon or something like that. So we could probably think of all sorts of other types of risks as well. And we might want to do a better job of categorizing them. I've started to do that here with reputational risk, regulatory risk, legal risk, but there might be other ways that we would categorize them. So there are these risks. Now, as a manager, what we care about is, well, how do we go about trying to mitigate these risks? And again, here's a sampling of ideas of ways that we could mitigate these risks. And some of them are fairly minor and maybe easier to implement. Others are quite drastic, okay? So maybe, if what we're really worried about is losing our customers' trust, maybe there are ways that we can sort of try to educate our customers about what it is that we, Amazon, do. That might be a way to mitigate risk of losing trust with customers. If the risk is, cyber attacks and data being stolen, maybe the way to mitigate it is to have better data security measures. So there's some real cost here, but that might help mitigate this risk, especially if we think the cost of the risk itself is quite high. Just jumping down a little bit, non-market strategy. So this is a term that we like to, I'm a strategy scholar. A lot of the research that I do is around strategy. And so we often think of competitive strategy. So that's strategy where a firm is competing against another firm to try to gain customers or something like that. Non-market strategy is not that type of competitive strategy, right? Market-based competitive strategy. Instead, the idea here is thinking about how firms interact with a government or a regulator to try to change the rules in the marketplace, okay? And so again, if we're really worried about regulatory risk, then one way to mitigate that is maybe working closely with regulators, such that if there is some regulation put in place, it's put in place in a way that benefits us as much as possible. Now, this might be very extreme, but if we're really worried about all these risks, like if we think the costs from all these risks are quite high, then a way to mitigate it is to get rid of Alexa, right? Like if we think that the risks, especially the risks not just to Amazon's Alexa, but to the rest of the product lines that Amazon has is so great, then probably the best solution is just to get rid of Alexa, right? That would mitigate that risk. So again, here I'm trying to give you a sense of that there are lots of trade-offs here, right? There's all sorts of different types of risks, and we can categorize them, and we can try to put dollar values on some of these. But then where we want to go is, well, how do we go about sort of mitigating these risks? And is there sort of dollar values that we can put on these different ways of mitigating the risks? Okay, so just to recap, lots of exciting applications of AI. They will likely lead to economic growth. As an economist, I'm very excited about that. Recent advances in AI highlight the potential for growth, but also potential risks. Mitigating risks will help ensure that customers benefit from AI, but more than that, they'll help ensure that firms benefit, society benefits, and then that we will ultimately get this economic growth that we started talking about at the top. If we can't address these risks from AI, then my belief is that we won't actually get the benefits that AI promises. Okay, so that's sort of, those are my the sort of planned remarks and the slides that I wanted to walk through. Bronwyn, what I think I'll do now is I can turn to some Q&As. Does that sound?
That sounds great.
Good?
That's great.
And again, just as a reminder, so there's the Q&A feature, and so I encourage you all to please stick in some questions. Right now I see one question, and Bronwyn, do the participants see the question as well, or should I read the question?
Yes, they don't see the question.
Oh, okay,
so
great.
if you'd like, I can either, or you can read the question out loud.
Great. So let me read this out loud. So how can creditworthiness be used using non-traditional methods as regulation restrict parameters which can discriminate? And so what I think the question is getting after is, the person who asked this, you can ask a different question if I'm not answering the question that you have in mind. So there are a number of what are called protected characteristics. So for example, race, gender, age, religion, right? So there are a variety of these restricted categories of questions that at least, and this, by the way, this is something that makes it very difficult for large multinational companies. These restricted categories vary across countries. In some countries, some of these are allowed, and other countries they're not. But in the US, there's a well-known set of types of questions that you can't ask, okay? And so I think the question that the person is after is, given that those parameters are restricted, how can we make sure that we're not discriminating? So for example, when it comes to lending or something like that. It's a great question. So a firm itself might not know, okay? What I was referring to when I brought up one of the potential benefits of AI, especially AI as it's used by some fintech firms, is that there is the potential to serve customers that might have a hard time traditionally being served by banks and other types of sort of mainstream sources of finance. And indeed, there is some peer-reviewed academic literature on this. I'll just give you one example. So it turns out that when so if you all may or may not remember this, if you're in the U.S., you might remember this. One of the policies that came out at the start of COVID was something called PPP loans. I don't remember what PPP right now stands for, but these are basically business loans to small businesses to help them stay afloat during the early days of COVID. And the way that the government got this money out is it came out in sort of two different ways, at least two different ways, maybe three waves. In the first wave, basically the way the legislation was written, as I understand it, is all the money was sent to sort of mainstream banks, basically big banks and things like that. Like the analysis of the loans that were made is that they primarily went from those banks to zip codes and counties that were sort of disproportionately, had sort of disproportionately white-owned businesses. In the second and third waves, and again, I might be getting some of the details wrong here, but I'm just trying to give you a sense of this. It sort of opened up to fintechs, and the government made money available to fintechs to do lending. And one of the really interesting things is a lot of the lending from the fintechs went to areas that had been underserved by the large banks that sort of tended to mostly provide financing for white-owned businesses. And it looked like it was Black-owned businesses that, at least in a relative sense, got a lot more funding from fintechs. So again, this and why is that? Well, it might be because these fintech companies relied on other types of parameters that maybe a large bank wouldn't normally rely on. The large bank, traditionally, the large banks sort of rely a lot on relationship lending and things like that. You might worry about bias creeping into relationship lending, whereas if it's just some data that's being collected, maybe there's less bias there. Sorry, that was sort of a long answer. I'm not sure if I entirely got at the question, but there are a bunch more questions. So let me come to some of these. Next question. How can governments balance the economic benefits of AI with the need for ethical oversight and regulation? And how can AI executives in the private sector ensure that AI-generated economic gains are equitably distributed across societies? Yeah, this is a great question. This is a really big picture question, right? The reality is that each government is going to approach this in a different way, because each government, I mean, if you think back to some of the, I'm going to very quickly scroll back to the AI safety slide that I had, right? So these are the sort of different categories of topics that people tend to care about when it comes to AI safety. It turns out that each government around the world sort of views these things in slightly different ways. So let's just take privacy of user data. So we know that in the EU, the EU government cares a lot more about privacy of user data, and hence GDPR is in place in the EU relative to the US, right? So there's already that this question of balance, I don't think there's an easy answer to it, because it's going to be balanced differently across different geographies, different countries, just depending on what it is that people care about in these different geographies. So that's from the government point of view. So the next part of that question is, how can AI executives in the private sector sort of handle this? That's where I think it's really hard. So if you're a small private firm just based in the EU, then you're okay, because you just worry about what the EU regulation is. It's much harder if you're a larger firm that's serving customers in the EU and in the US, because now you have sort of these different regulatory regimes that might be offering you different opportunities, if you will, or sort of putting in place different constraints. And so I think that that's one of the harder things for executives to handle. It's just sort of the difference in regulations across domains. In terms of equitable distribution across society, I'm sort of relying on my slides here. So I apologize. Hopefully you didn't get motion sick when I did that. I'm still going back further. One of the things that I'm most excited by when it comes to AI is this last bullet point here, workforce development. So the example I gave here was pairing workers with a certain set of skills, using AI to help pairing those workers to a set of jobs. However, there's some recent research showing that AI is really good at helping to train and retrain workers in new sets of skills, right? Sort of cutting the time in half or more that it takes to learn a new skill. Why is that? Well, it's in part because AI can be very tailored to what your specific strengths are and what your weaknesses are. And so it can sort of help, instead of providing some sort of generic or vanilla tool to help you learn, it provides this very tailored tool that helps, sort of addresses whatever shortcomings you might have, and sort of can help move you more quickly down the learning curve to learning whatever the new skill is. And so the question around equitable distribution across societies, I think one of the potential benefits of AI here, right, this sort of ability to improve education, is one of the ways that we will ultimately see more equitable distribution across societies. I know we've got 2 more questions, and we have about 3 minutes left. How should financial institutions, this is the next question, how should financial institutions adjust their risk assessment models to account for AI-induced economic volatility? Great question. So I'm not sure. And part of the reason why I'm not sure is that while I understand the technology and sort of especially a lot of the strategic risks coming out of it, I am not a financial regulator, and I'm not a person who works in risk management at a financial firm. And so whatever I certainly could sort of pontificate on it. You ask any professor any question, we will pontificate, but I think it'll be incorrect. I think talking to a risk manager in a firm would be a better way to go, or one of our professors who specialize in this, like Professor Richard Berner, would be a great NYU Stern professor to ask this specific question to. The one thing that I'll say, I used to get lots of calls from companies around these types of questions all of last year up until about November or so. And it started to peter out a bit, questions around AI and volatility from AI. And over the last 2 months, I get no questions on AI-induced economic volatility. Instead, it's politically induced economic volatility. I think that there's no question that right now that is top of mind for most managers. It looks like the last question here, and maybe while I'm addressing this last question, Bronwyn, I'm going to stop sharing. I don't know if you want to pull your last slide up again, the one that had that
Sure.
QR code.
Sure.
So the last question is, what are the potential consequences of AI monopolies on market competition and innovation? Yeah, this is another excellent question. And this is one where I've done a little bit of policy work on. So there's sort of two schools of thought here. So one school of thought is that these AI models are so expensive to build and maintain that it's inevitable that there's going to be some AI monopolies, and that's okay, because the benefits that we'll get from these large models just far outweigh any of the downsides. The other school of thought, though, is, well, that could be true, but nevertheless, there are just lots and lots of benefits to there being market competition. I tend to fall a little bit into the sort of second of the camp. I think market competition, we just have tons and tons of evidence that more competition between incumbent firms tends to lead to lots of benefits for consumers. Some of those benefits are innovation, that this is what this specific question was about, but some of the benefits are just lower prices or perhaps slightly higher quality, right? You can imagine competing for a customer not just on price, but on quality. So I would like to see more competition. What I don't want to see is regulated competition, if you will. So in other words, like a regulator trying to handcuff an existing firm. Instead, what I'd like to see are policies that make entry of other firms easier. And so one of the ways to do this is making sort of access to data, right? So these large language models require just so much data. The incumbent large firms, and we listed them earlier, they have the benefit of having already sort of grabbed a lot of this data or having a user base from which they get this data. I think trying to think of ways to allow potential entrants to also access that data is useful. And so one type of policy that people think about in this vein is called data portability. And the idea here is that users like me or you can take your data from whatever whatever company, large company A is, and bring it to some other company that would then benefit from having access to that data. Okay. There are certain trade-offs as well with that. I know now we're sort of past time, and so I think I will say thank you to everybody who joined the webinar. I had a lot of fun answering the questions and speaking with you all, and I'll turn it back over to Bronwyn.
And those were some fantastic, well thought out questions. So thank you for that. Professor Seamans, thank you so much for that insightful and thought-provoking presentation. We really appreciate you sharing your expertise, and this really gives the audience a glimpse of the kind of forward-thinking perspective you can really expect from our faculty in the MSGF program. And then to everyone who joined us, thank you as well for taking the time out of your busy day. We hope you found today valuable as much as I did. Just we encourage you to take the next step. Please do submit a preliminary information form that you can find it also on our website. And please reach out to us directly to our admissions office with any questions you have. And again, Professor Seamans, thank you again. And this session will be recorded, which will be great to have. Thank you again, Professor. Have a great day. Bye-bye.